It's a Tuesday morning, and some of you were out at the Royal Yacht Club last night, so I need to wake you up a little bit. So can you all stand up, please? So what I want you to do is fold your arms like this, nice and tight. Okay, and on the count of three, I'm going to ask you to open up your arms like this and to say wealthy, okay? So on the count of three. 1, 2, 3. Wealthy! Feels better, doesn't it? Cool, welcome. So, thank you all for coming through. And the topic that I've been asked to share today was INVESTTECH. Now, Kevin started off with talking about what FinTech is. So what do we think INVESTTECH is? Other than the bank next door. Pardon? Technology of investing? Investing using technology? Online investing? Democratizing investing? So it's interesting. There's one in the back. Yep. Cutting out the middlemen? Yeah, they're all right. You know, for me, I do believe that sometimes in life people seriously try and overcomplicate things. And you can bring a lot of acronyms. We can bring FinTech, crowdfunding, ReTech, PropTech, INVESTTECH. In simple terms, it's technology coming to the space. It's technology coming to the real estate and investment space. So there's nothing really complicated or difficult about it. And for those of you who do or don't know, I talk quite a lot about it in my book. And I'll put a copy. I'll go on here. I'll put a copy of the ebook on the WhatsApp group. If you're not on the WhatsApp group, I highly recommend you jump on. If you want to jump off tonight, go for it. But all the resources today we're going to share on the WhatsApp group. So if you're not on, please chat to Kim, because the one problem with WhatsApp is you can't go backwards. Like if you're not on, everything that was put on, you're going to miss. So I'll put a copy of that on. But what I talk a lot about to start off with is because it's really important to understand someone's why. So that's a picture of my dad. And I effectively was 13 years old. That was my first property project. And my whole life I've been trying to figure out how we can marry together technology and property. The challenge is that my father did what we were all told to do. He went to school, he went to university, he became a chartered accountant, he was financial director of a listed company, he retired at 49, and unfortunately on the 1st of August 2005, he died broke. Now that's not the way it's supposed to end. You know, he did everything he was told to do. And the part that he didn't do right was that he really gave his money to the financial industry. And for me, growing up as a young boy, I decided there has to be a different way. I also enjoyed playing this game. You know, who here likes to play Monopoly? Yeah? Who plays with their children? Who plays in real life? So, you know, I as a young boy decided that, you know, why can't we turn this into reality? And then living in South Africa and the wealth gap and the major problem with income inequality, you know, we just looked at this and we said, no, there has to be a better way. There has to be a way to ultimately solve this. And so the one thing when it comes to this industry is it's often, you know, it's very serious and you've got to dress up and you've got to wear suits. But I'm from Durban and I'd really ask if you don't mind if I take my jacket off. Because I can't, like, for me, we've got to relax and have a bit of fun. So for me, basically, you know, when you look at the stats, it's ridiculous. Literally, you know, 50% of the world's wealth is owned by less than 1%. It's actually 0.7% of the world's population. Depending on where you live, if you live in Australia, Japan, Europe, or North America, you're okay. The rest of us have problems. If you're a lady, I apologize, but you're on the seriously wrong side of the curve. And if you're a millennial, well, you were just born in the wrong time. And then for all of us, 49% of the world's wealth is held in real estate, and yet only 12.9% of the world's population has access to that real estate. And then what's interesting is, you know, literally last week I was in Puerto Rico, and you meet people all the time, and you talk about the 1%, and they immediately assume to themselves that they are part of the 1%. And so I always ask them the question, the very first thing I say to them is, if I'm having a one-to-one conversation, and the guy sort of is talking as if he's part of the 1%. I say, do you own a medical building? And the guy's like, what are you talking about? I'm like, no, do you own a medical building? And not once have they said yes. And I go, well, maybe you're part of the 99%. And my point being is that unfortunately, statistically in the Western world, all of us, statistically, 99% of us are going to fail. We're going to work hard, we're going to go to school, we're going to go to university, we're going to invest, we're going to save, we're going to pay our taxes, and at 65, we're not going to retire wealthy. And that for me is just disgusting. A 99% failure rate. So, for us, we decided to, and talking about INVESTTECH, what I wanted to do was to talk about real life examples. We decided to allow the 99% to be able to invest using technology, to make it as simple as a swipe of a finger, and to make it from $1. Now, again, some of you have heard me say this before, but $1 is not going to change someone's life. But if we change their habits, we'll change their destiny. And I truly, truly believe that it's not only about helping everyone in this room today, but it's actually about helping the people who are going to serve us lunch today. Because when we get to that perspective, we're going to make a material difference. So this is a great book. Who's read this book by Tony Robbins, Unshakable? Yeah? I highly recommend reading this book. He's one of the sort of best life coaches, business coaches in the world, and he was so disgusted by what happened to the American middle class in 2009, 2010, that he went and literally interviewed 50 of the wealthiest people in the world, and he looked for the patterns and the trends. Now, in simple terms, I don't have time today to go into this, but in simple terms, there are 4 things that he says. The first one is don't lose money. The second one is asymmetric risk-reward. The third one is tax efficiency. And the fourth one is diversification. So diversification across assets, within assets, across markets, and across time. So a good question for you quickly. If you own 4 houses in Cape Town, are you diversified? If you own a house in Cape Town, Joburg, and Durban, are you diversified? A little bit more? If you own 50% of your wealth in direct real estate and 50% of your wealth in a REIT, are you diversified? A real estate investment trust. What about if you've got 50% of your wealth in the stock market and 50% of your wealth in a property fund or a REIT? So, David, I'm not sure what your opinion is. Do you find the Johannesburg crowd more boring or the Cape Town crowd more boring? Because I don't know. I'm trying to work out which one's been more difficult to deal with. Come on, guys. Let's liven up. So, what do you think is more important? Like, if you've got 50% of your money invested in the stock market or 50% in a REIT, which one do you think? Are you diversified? Yeah? Both the stock market. They are. So a REIT or property fund has a higher than 70% correlation to the stock market. It's a financial instrument. What about if you've got your money in the Johannesburg Stock Exchange, the London Stock Exchange, and the New York Stock Exchange? Are you diversified? So it's interesting. So turn to the person next to you and just discuss this quote. So Ray Dalio is one of the wealthiest people in the world, and he says that all you have to do to get wealthy is you need 15 uncorrelated bets with an attractive array of assets that don't move in tandem. It reduces the risk by 80%, and the risk-return ratio increases by a factor of 5. So if you could just turn to the person next to you and just explain to them what that means. And once we all understand it, we can go home, basically. I'm serious. Please discuss it. Anyone want to share? Anyone want to share? So, who completely understands what that says? Who thinks they've got no idea? Who thinks it's in Mandarin? So, okay, right. So, for me, this is a classic example of what so if you look here, asymmetric risk reward, what are we taught at school and university? The higher the risk, the higher the reward. It's completely wrong. Asymmetric risk reward means you basically reduce the risk and you increase the return. So, what we taught is fundamentally flawed. The second thing that's fundamentally flawed is we also taught generally that we don't understand financial stuff. We're not clever. We must go talk to a financial planner, and they are much cleverer than us, and we must pay them fees to look after our financial well-being. Yes or no? So what really irritates me is that very complex things are actually generally really quite simple. So let's look at this. All this actually says, in pure English, is make 15 uncorrelated investments. So make 15 investments that are not tied together. Make sure that they're attractive, so attractive assets, and that don't move in tandem. That's all it says. Make 15 investments that are not tied together, that are attractive, and don't move in tandem. That's all it is. The rest is what happens if you do that. If you do that, you're going to reduce the risk by 80%, and you're going to increase the risk-return ratio by a factor of 5. So it basically means you're just reducing the risk, and you're increasing if the risk is low and the return is high, the ratio is increasing by a factor of 5. So now the question is, if it's that simple, all you've got to do is make 15 investments that are in attractive assets that don't move in tandem. Why don't we all do it? Might be, yeah, not quite that simple, yeah. Yeah. And Steve and my parents are very good friends, so we're glad they're both not in the room, but no. Yeah.
I think it's, you have a sum of money and to diversify it 15 ways means that it's a really small amount.
Yeah, I actually think you're spot on. Like, in simple terms, okay, so what are 15 different investments? Well, we've got real estate, we've got the stock market, we've got bonds, we've got fine art, we've got cars, we've got, whatever. I mean, even coming up with 15 is quite hard. Yes or no? Okay. Now, to invest in most of those things, you need money. You want to buy a house? You've got to put down at least, a 10%, maybe transfer costs, etc. Now you've got to get into a commercial building, a fine car, fine art, etc. So if I understand what you said, my opinion of it is up until now, it just hasn't been possible for the majority of us. Because to put in any amount of cash into anything, you just couldn't do it. Is that what you're saying, basically? So, for me, this is what INVESTTECH is actually all about. Because platforms like ours, and there's many others out there, are democratizing the way to invest. So if you want to get into the stock market here in South Africa, there's easy equities. I don't know if you know about easy equities, but you can invest in a stock in South Africa from R1. Now, up until now, if you wanted to invest, you'd have to go through a stockbroker. That would charge you a lot of money. If you wanted to buy one Naspers share, it's like 2,000 Rand. Whereas now you can go on easy equities, and it's literally 64 cents per 100 Rand. So it's 0.64% is the fee, and you can invest from R1. So really, there's no excuse for anyone not to be in the stock market anymore. Literally, no excuse. And that's for me what INVESTTECH's about, because it allows us now to participate. I want to talk a little bit about the value chain of real estate, because this is another classic example. So if you take the current real estate value chain, one of the third myths that I want to debunk today is that generally when something sounds too good to be true, we immediately think, if it's too simple, it sounds too good to be true. Does that make sense? So I'll ask you to bear with me, because this is super simple, actually. And I've had the privilege for 18 years of helping wealthy people invest around the world, and I would have had to be an idiot not to have spotted the patterns. But when you look at the current market, there's 16 middlemen between the investor and the investment. There's no trust, there's no transparency, there's high fees, and there's low returns. And if I'm wrong, then please explain to me why 99% of people do not retire wealthy. So let's look at the value chain of real estate. You've got land zoning. So if you take Century City, it used to be a big marshy piece of land. Then comes along the developer, and they build a vertical structure. And then comes along the investor, and they actually own the building, and they stick a tenant in, and they create income. Then generally comes along a fund or a REIT, and then comes along you and I. Now let's look at this quickly in terms of the returns. Now I'm not saying that you definitely get these returns, but these are the returns that investors aim for. The internal rate of return for a land investor, they're looking for an IRR of around 30%. A developer is looking for around 25%. An investor is looking for an IRR of around 20%. A fund or REIT is looking for a cash-on-cash return of around 5 to 8%. And I'm being kind there. If that's England, that's 3 to 5%. Now, why are they looking for a cash return? Can anyone tell me? Pardon? Cash is king, yeah. When you pay your money to a pension, what do you want? So you think about it. When you pay to those type of institutions, they effectively are paying you back cash flow. So they want to buy assets that have cash flow. Does it make sense? They want to buy de-risked assets that have cash flow, to put it in simple terms. And then you and I come along, and we've invested, and we're just trying to beat inflation, and we wonder why we don't get wealthy. So the question we have for ourselves is that if this is complete rubbish, go to my LinkedIn. It's Scott Picken, that's chicken with a P. And you can literally just go and see this article. Now, this was out last year. Rebosis is effectively the fund that's a listed fund on the JSE that bought a whole bunch of assets off the Billion Group. And there's a whole debate here around whether they were actually buying anything of value, yet they raised billions and billions of rands. And the thing that is really interesting is that the same guy owns Rebosis and Billion. This happens all over the world, and it happens over and over again. So the question I've got for all of us is that if you know that the real money in real estate is made higher up the value chain, why are we not, why are you guys not developing Century City? I know Bill is developing a lot, so this excludes Bill. But why are you not doing development? Why aren't you owning buildings like this? What are the reasons? Entry level? For me, for years and years and years, these are the sort of things that we've heard. Sounds too good to be true, scam, I don't have the money, I don't know how, management issues, tax, right structures, etc., etc., etc. So the question I've got is that, this morning, I basically caught an Uber here. Not this morning, yesterday morning from the airport. And, really, when you take Uber, what is Uber really? Like when you used to catch an old taxi, you used to get in the car, it had 4 wheels, a driver, and an engine. And it used to take you from A to B. Does Uber do anything different? It doesn't. It does exactly the same thing. All the technology's done is it made it much more trustworthy, much more transparent, much more accessible, and more efficient in terms of the process. So when you look at the principles of real estate, it's really not that difficult, to be successful in real estate. You need to look at the macro and the micro factors. You need to look at the location of the property. You need to do the due diligence and understand the risks. You need to make sure you've got the right partners. You need to understand the tax, the compliance. Don't worry about the slides. I'll give them all to you on the WhatsApp group. You've got to know how to manage the asset. And the one thing that most people get wrong is you've also got to have an exit strategy. Now, literally, that's real estate 101. So the question is, for us is that Nelson Mandela said money won't create success. The freedom to make it will. And for us, we literally said to ourselves, well, just like when, in the old days, I would have wanted to catch a taxi from the airport. This would be me. I would phone the taxi owner association, who would phone the guy that got the car, that would phone the driver. And about 2 hours later, I'd probably still be at the airport. And I would phone again, and he would phone him, and he'd 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 phone him. And finally, I'd find the guy. And then, if he didn't know that I was from Cape Town, he would take me via Stellenbosch. I'm serious. It happens all over the place. And if you left your cell phone in the car, you'd never see it again. And, yesterday it was as simple as I literally took out my phone, and it just connected me with the driver. The driver and I spoke to each other, and he took me to the hotel. And what we literally said was, well, if we're doing it with Airbnb, we're doing it with Uber, why can't we do it with investing? Why can we not help you and I just invest directly with people that own assets, so income? So this type of building is an existing building. It's an income-producing asset. Or get involved in new developments like the ones that Bill Rawson is building, basically. And you basically go up the value chain and you partner with the people that are higher up the value chain. So for us, this is what I believe INVESTTECH is all about. And to give you a personal story, it was 2009. I'd helped about 2,500 people buy houses or apartments in England, Australia, and South Africa. And I was in Bondi Beach, Sydney, and I met Henny Besaidnout and Peter Fenstra. And I remember saying to them at the time, why are you buying medical buildings? And before I go any further, unless you're a Wealth Migrate, so don't put your hand up if you're a Wealth Migrate client. Who owns a medical building not through Wealth Migrate? Okay, so that's exactly how I felt in 2009. I own quite a few houses myself, and I'd helped obviously a lot of people. And I said to Henny, why medical? And he said to me, well, Scott, think about it. No matter what happens in the economy, people need doctors. I was like, that makes sense. He said, secondly, doctors never leave. And I went back to my childhood, and I was like, shit, the medical premises in Kloof are still the medical premises. Like, my doctor might have passed away, unfortunately, but the medical premises are still there. And thirdly, doctors are very good at being doctors, but they're not accountants. So they sign very good, long-term, favorable leases. I remember sitting there in 2009 thinking, how have I never been taught this? Without being arrogant, I have an honors degree cum laude from UCT. I have a master's degree cum laude from London. Why has no one ever taught me these simple, common sense ways of making money? And I turned to Henny and I said, dude, I'm in. Like, how do I participate? And he said, no, it's easy. It's for 8 friends and family members, and it's 5 million Australian dollars each. And that was the problem. Now, the frustrating thing is that company's listed on the Australian Stock Exchange. You can go and check it up. It's called Blue Sky Properties. It's worth over $700 million, not even 10 years later. And I just wish I could have participated. And, for me, that is what excites me about technology, because we basically just persuaded them. They wanted to form a big property fund or a REIT, Henny and Peter. And I said, listen, there's lots of them. Why be different? Why not be different? And why don't we build a tech platform and allow people access? And there's many, geez, where's the world map gone? Okay, so that's a world map. And I don't know where it's gone, but anyway. And in simple terms, there's many platforms all over the world. There's lots of crowdfunding platforms and other types of platforms. Now there's a lot of blockchain, crypto, real estate platforms that are coming up. But what was interesting is that we sort of sat back, and I think being sort of South African and Zimbabwean and whatever, you couldn't build a platform just for South Africans. There's not a big enough market. And we all want to be global. So we said to ourselves, well, when I catch an Uber app, I don't want to have to use a different app in every country. And even worse, I don't want to have my portfolio on multiple different apps, because quite frankly, it's like having 10 different management agents. So we said to ourselves, well, why can't we build a platform where everyone can be in one place? Everyone can manage their investments. The second thing we said is that when we started off, what used to be $5 million, when we started off, it was $1 million. Then we got it to $10,000 minimum investment. Then we got it to $1,000. We're currently beta testing $100, and the dream is to get it to $1. And, for me, that's when everyone can get access to good quality assets. We've now got members in 111 countries and investors in 44 countries. We've had about $71.4 million through the platform, and we've done about $485 million in real estate investments. But in simple terms, what it allows is you've got people here on the demand side, so you and me, the investors, and we get access to the best property partners, and the best property partners get access to global investors. And in simple terms, they can list their projects, and we can invest in the projects. It's literally that simple. So we asked ourselves the question, how do we make global real estate investing easy? And we, rather than all the hassle, we wanted to be able to do something that people could invest in minutes, and they could get access to the best partners, the best opportunities from as little as $1,000. And most people, when they think of real estate, they think of management, maintenance, broken toilets, and that's just if it's local investing. If it's offshore, it's tax, it's structuring, it's compliance. And we decided to change all of that and literally help people just be able to focus on the best returns. So there's 4 simple steps. People can literally sign up. They can choose the best investment. Now, please understand, we're not a fund or a REIT. We do not give financial advice. We are no cleverer than you are to make decisions for you and your family. So you get access to choose the opportunities yourself, and we help you with the tools and the information. You can transact online, and you can manage your portfolio online. And so whether it's America, England, Australia, or South Africa, you no longer need to choose. And we've got systems. And again, when I caught my Uber, who here has gone and actually read the algorithms of Uber to know how the car and the driver come together? Anyone? You don't care really, do you? Like, you just care about the car picking you up and taking you from A to B safely and simply. So if you're left-brained and you want to read all about it, you can, I started with the whole GIDS thing when Clem Santa endorsed this book. And if you want to read all about it, it's here. You'd be the only other person to read this with my mother. But what we actually wanted to do was to put a system together that really just helps people know where to invest, when to invest, who to invest, what to invest, and how to invest. We want to basically simplify the investment process for people. So if you are left-brained and you want to go and read about GIDS 0.1, which is the residential one, or GIDS 2.0, which is the commercial one, it's all available. It's in our documentation, it's on the website, etc. But for most people, all they're really interested in is how to actually do it. And then it comes to trust. So today is all around blockchain and technology. Our greatest problem is trust. Is there anyone in this room that's sitting there going, this sounds too good to be true, how could I trust this guy? Yeah, there's one honest person. No, because most people are. I mean, literally, virtually every investor we've ever had said, it took me a while to trust, I followed you, I came to events, I came on a buyer trip, whatever. Trust is the greatest barrier to entry that all of us have. But for us, particularly in the investment space, so we decided to solve trust doing two things. One was that there was an old school methodology of a listed, regulated environment. So we integrated the platform with the Seychelles Stock Exchange. And why not the JSE or the London Stock Exchange or the New York Stock Exchange? Because it would affect your returns. There are so many fees that your ultimate return would be dramatically diluted. Yours says 5 and that says 11. The second thing we did was we built it on blockchain. And I really encourage us, after lunch to talk more around blockchain, because blockchain is distributed trust. Blockchain is going to change everything about the way that we work and live. It's going to have a bigger impact on our lives than the internet has over the last 20 years. And that's a pretty bold statement. And it's not my statement. It's pretty well known out there. So really I encourage you to understand this. But for us, when it came to trust, we had to solve, how do we solve the trust equation? And the new economy is all about trust, and blockchain is the foundation upon which that trust is built. You've got e-commerce and you've got social media, and the two are being married together, and it's creating social commerce. And the foundation of social commerce is blockchain. So what's fascinating is that there's an old way, which was all about middlemen, very limited trust and transparency. It was slow, inefficient, and expensive, and it's difficult to understand the contracts. And then you've got a new way, which is no middleman, increased trust and transparency, accessibility. The marketplace delivers faster, cheaper, and better, and it's simple, user-friendly, and intuitive. What I laugh about is whenever I travel through the airports, just because I can put a massive ad up in the airport, or I can play an advert before or after carte blanche, or before or after a Springbok rugby game, then you should definitely trust me. Yes or no? It's the way it works at the moment. Whereas when we look at Uber or Airbnb or any of the things that we all use to trust and make decisions, it's actually all about social interaction and what they call social proofing. So I put this on the WhatsApp group for you. I heard this in Puerto Rico last week, and it's one of the most beautiful things I've heard recently. The biggest shift that's happening is from scarcity to abundance and from competition to collaboration. So anyone that's sitting here from a scarcity perspective and particularly thinking, wow, this could be a scam, that's great, and you're allowed to think that. But I don't believe we live in a scarce world. I believe we live in an abundant world, and by 1 + 1 coming together, we can equal 11. So it's not about what you can take away, it's about what you can add. And then equally, in the old days when I had IPS, technically everyone was our competitors, but now we're a platform and everyone should be collaborating with us. We should all be working together, because again, like David said, on networks, the more we come together, the more power we actually all have. It's a very important mindset of where the world's going. And particularly for those guys that are, the millennials, it's really important to understand. Just in terms of performance, if you look at some of the type of deals, this was a medical portfolio. It was 6 buildings, a $16 million deal. We bought it in 2014. We had about $6 million, just short of $6 million we raised. The projected returns was 8.3%, including the capital growth. It was IRR, this is a net to the investor, of just short of 16%. We've actually paid out 10% cash on cash for the last 3 years. And this one here was 11.22. That's been paid out cash on cash in dollars. That one was 8.49. This one was 8.29. As a matter of interest, does anyone know what the average REIT in America is paying right now in return? Anyone? Yep. So it's the last time I checked, it was 4.75. So the question I've got is, do you think that, if they're getting 4.75 and we're consistently hitting over 8, are the South African universities just that much better than Harvard? Are we that much better at negotiating? Or is there something else happening? What is it? Cutting out the middleman. It is. There's just literally, you've got the investor and the investment, and they're being put together without the array of fees all the way through. It's really important to start understanding this stuff. So if you've got Bitcoin, you can invest through Bitcoin, and it doesn't all work. Anyone that's been involved in real estate, and if I stood here and said every project worked 100%, you would know I was lying, because that's not how the world works. So this is a deal I personally invested in as well. In Australia, it's a 50-unit development. We bought the land, and just as we were about to start construction, we'd already sold 12 of the 50 units. The Chinese government shut down the way for Chinese to move money overseas. Now, the majority of apartments in Australia that were being bought was by Chinese. So overnight, the Australian banks stopped lending to any foreigners, so including South Africans, anyone. And virtually overnight from that, the construction banks effectively stopped giving construction finance because now there was no home loans. So, things happen in the world. And actually, tomorrow, I'm hoping that we're going to get our final settlement here. And we're actually selling out. So we're going to get out. And what we believe in life is that return of capital is more important than return on capital. I'm going to repeat that. Return of capital is more important than return on capital. So my uncle taught me a very long time ago, work out what your worst case scenario is, and everything else is upside. So the most important thing is look after the capital. Once you've managed that risk, then you worry about how do I make a return in terms of the upside. Is that fair? So in this situation, economically, unless I was the Guptas, no, I don't know, but unless I was somehow involved in the Chinese Communist Party and knew that they were going to change their regulation, we could not have foreseen that coming. So in this situation, the economic environment's changed. It's better to take our capital and redeploy it elsewhere. Does that make sense? And this was a deal in America. And again, the occupancy, we wanted it to be 92% or above. And it actually dropped to 85%. And Michiel and his team went in, the partner on the ground, the PPA group, created a special task team. And I'm very glad to say that for 6 months, we didn't hit the returns we wanted. But 6 months later, it's back over the 92%. So again, in life, things don't always go according to plan, but when they don't, you do something about it. So I don't have time today to talk about the portfolio strategy or even how to get a global citizenship. If you want to talk about it in the Q&A, we can. But I did want to share with you, we've actually created a course, the 8 Steps to Wealth Through Real Estate, where I've gone into all those details. So it's going to be a digital course. And just in my interest, how much do you think we should charge for this course? It's amazing. Everyone says that. They said the same thing in Joburg. Yes, this gentleman in front said it should be free. I agree. So it's going to be free. Our whole philosophy in life is we need to share the knowledge. So if you want to go deeper into these topics, they'll be available from hopefully the 4th of April. And then this is something that the team built with Roger Hamilton. And it's our wealthy test. And whether you're a beginner or whether you're very globally astute financially, the wealthy test will help you know what to do, how to do it, who to do it with, when to do it, and why to do it. And ultimately, I'm quite excited about where this is all going. So whether you want to, these are the type of buildings. This is a medical building in America, another medical building in America. This is a residential complex in London, and this is an industrial frozen storage logistics center in Australia, and even medical here in South Africa. These are all portfolios and projects that are coming online. So to finish off, in this book that I told you about, one of the things that I found absolutely fascinating when they did all the research is that a change of 1% equals 10 years of your retirement income. Just arguing or negotiating 1% in fees. So people are like, who cares, 4 or 5%? Well, it's only 10 years. Now, remember I just said to you 8 minus 4, that's 4%, that's 40 years. So for me, when it comes to INVESTTECH and everything David's talking about, I believe the real world life applications are starting to have a material impact. And it allows me to finish off with the wealthy coin. And we're going to break for, where's Kim? Yeah? We're going to break for tea now, huh? 10 minutes to tea. Great. So we're going to break for tea in about 10 minutes. And for those of you who are interested, I suggest you grab a tea and come back. I'll start at 20 past. I'm going to talk about the wealthy coin, what it is, and how people can get involved if they're interested. For those of you who are not interested and have come here to learn from David and blockchain and everything, that's fantastic. Enjoy your tea. Is that fair? Yeah? So for me, what's exciting with where the world's going is that we sat back 3 years ago and we said two things. We said, one, we need to bring blockchain into this company to solve trust. I've already told you that. And the second thing we need to do is we want to get it down to $1 per person per investment. We cannot do it with the current system. It's impossible. There are too many friction costs. There are too many middlemen. It's just not feasible. But with cryptocurrency and blockchain, it is possible. It will be possible for someone to swipe a finger from South Africa to America and literally invest from $1. And for the guys on the tech team, they're going, shit, Scott, keep quiet. But what's that? And the second thing that's interesting is that who here could come and with 100% accuracy explain to everyone the value of Bitcoin? You see, it's interesting because Bitcoin's ultimately based on supply and demand and sentiment, yes or no? There's a bunch of other factors, but that's the really driving force. So we sat back and we said, well, what about if you could create a cryptocurrency that was actually based on an asset class that everyone understands? Now, I don't care if you're a goat herder in Africa, a rice farmer in China, a rickshaw driver in India, or an investment banker in New York. Whether you own property or not is irrelevant. You know the value of property, right or wrong. So, we said to ourselves, well, why don't we create a cryptocurrency that's based on an asset class people understand? And that for us is what we're building with the wealthy coin. In terms of Wealth Migrate, we're quite excited now. I've given you some of these numbers in terms of the transactions. The one that we're probably proudest of is we've got a higher than 70% reinvestment rate. So when Jill or Joe Soap invest, the chance of them reinvesting are over 70%. And the other thing that I'm really excited about is the team. So recently, Henny and I effectively started the company, and Henny basically wants to really focus on the real estate and the investment committee, etc. So he's going to focus very much on the due diligence and real estate. And what we've actually agreed is that Justin Clark, as of the 27th of February, became the chairman of the group. Now, why that's really relevant, who knows private property? You know private property? That then went to become One Media Africa. It's got marketplaces all over Africa. And so Justin's been building marketplaces for 20 years. And Martin Freeman has done 5 fintech companies now. Joyce Koffler is one of the top 10 ladies in America in fintech. Paul Nieder is one of the top people in compliance in the world in the space. Dr. Dolph de Roos, I don't know if you've read this book, Real Estate Riches. He basically does the education side. And then on the left hand at the bottom there, you can see David. I think Kevin's already explained him. Richard Titus and Michael Turpin are along with David, are two of the very recognized people in the blockchain technology space, and they're advising us in terms of the technology side. So I want to finish off with a thought for you. If you want to, this is a guy called Ray Kurzweil. So David actually had him up on one of his slides, and he's had a higher than 80% accuracy in predicting the future over the last 30 years to the year, which is quite impressive. And it's one thing to say, hey, we're going to do stuff in the future, but to the year, he has a higher than 80% accuracy of when it's going to happen. And what I learned from him when I was at Singularity University is the way to predict the future is to look for long-term trends and then figure out when they're going to intersect. So the example he used was that all of us, or most of us, have a mobile phone, a smartphone, and the guys that invented Siri sat back and they said, right, there's 3 major trends. 1 is artificial intelligence, 2 is voice recognition, and 3 is mobile phones. They're all going to intersect. Let's create a company called Siri, which they built, and 18 months later, Apple bought it off them for a couple of $100 million. Do you see the point? You look for long-term trends, and you look for where they're intersecting. So in our point, we believe that there's 8 long-term trends that people need to be aware of. Kevin's showing you this one. So the first one is gamification and learning. So it's ultimately going to fundamentally change the education system. Secondly is blockchain and cryptocurrencies, which are increasing trust and reducing costs. The third one is social commerce and collaborative investing. So that's people investing together, which is increasing returns and reducing risk. The fourth one is personalization. Who does not want to have a personalized path to wealth for you and your family? So you all enjoy being sort of stuck in buckets by the actuaries. The rise of the middle class. You know, there's 1.2 billion people joining the middle class, and 3 billion from the unbanked sector are joining. Globalization, you know, whether it's North Korea, Trump, Zuma, Brexit, people want to be diversified across assets, currencies, and countries. The social pressure. You know, people have had enough now. We have to solve the problem and empower the 99%. And most importantly, I believe that people nowadays want to have a purposeful and meaningful impact on the planet. So you bring those 8 things together. We talk about empowering 1 billion people by 2020. People believe that we are completely mad. The thing is, though, those 8 trends are going to collide by 2020. I guarantee it. And what's interesting is that with that collide, there's going to be massive opportunity. And so we're building the solution for what is needed. And what I'm going to talk about, you know, in the tea break is around the wealthy coin and the wealth partners. Kevin alluded to it, but it's the thing that I'm probably the most grateful for in our business, because it's effectively, we've got 130 shareholders that joined the team that have a vested interest in the success of the company, that get to learn and be with an incredible community of people. I mean, we had probably 60 people last night at a VIP dinner. And the part that, you know, yes, there's the opportunity to be involved in a company, and that comes with both the risk and the return, but it's also about having a purposeful impact on the planet. And so I'll talk a little bit about that in the tea break if people are interested. So these are the 9 industries, and I'll put this article on the WhatsApp group. But the top 2 industries that are expected to be disrupted by blockchain are banking and real estate. So if you're in banking or real estate, I highly recommend that you watch this space. And I don't know, Kim has actually introduced herself. Where's Kim? Kim. So Kim's standing over there. So Kim basically runs our community, and I just wanted to make sure that everyone knew who Kim was. So, you know, in terms of the whole community and everything that's happening, Kim's the one that's been running it. And if you've got any problems with the WhatsApp group or anything, Kim and myself and the rest of the team can help. So to finish off, that is my wife and my son. This was a picture taken about a year ago. My son was 5 years old, and he's learning at a very young age that to own, you know, green hotels and red houses is what we call smart investing. His dad, with an incredible team, has basically turned a dream into a reality, and now plays global monopoly with a mixture of residential and commercial assets. It's what we call smart investing. The wealthiest people in the world, you know, they have family offices, and the family offices look at their personal needs, they look at the global opportunities, they marry them together, and they ultimately create generational wealth. It's what we call smart investing. And our aim and our dream is to put smart investing in every single person's pocket. And so that's all from me now. I think it's time for a tea break. If you are interested in the wealthy coin or the wealth partner, what I'll do is at 20 past, I'm just going to run through some slides to explain in a little bit more detail, and then we'll get started again at 1:45. 1:45? I think that's right, huh? Yeah. So we'll get started again at 1:45, basically. So thanks to everyone. If you've got any questions, we'll go through it when we do the Q&A after lunch. And the one thing that I do want to just mention is that in the Q&A, please remind me to talk about the global real estate blockchain mastermind that we're putting together. Because all of us that have been in the real estate game for a long time, we're bringing together the best thought leaders in the world to discuss and debate how blockchain is going to change this industry and how we can stay at the forefront of that change. And we're linking it together with everything we're trying to do at the moment. But anyway, thanks for your time.